Let's speak with Jamal Mecklai, who's with us now. He's CEO, Mecklai Financial. Jamal, thanks very much for your time. Great to have you with us here. Appreciate it. I just want to start with global currencies for a quick bit, Jamal. You know, the yuan was, 2 months back? Yuan was at a low, dollar was rising. It's the exact opposite now. I think the Chinese yuan is at the highest point for the year 2016, and the dollar is reversed quite substantially, some 5% off the 2016 highs. It's, of course, sparked a rally in markets as well, stock markets around the world, the dollar weakness. What's your view? What's going on? Where are we at now?
Basically, there's a lot of uncertainty. Nobody really... Sorry. What was that? What was the question?
No. Where are we at now, in your assessment, given what has changed?
Hello? Well, frankly, I think, if you look at any analyst or whatever, nobody seems to really have a clue. So I think that it's more cloudy than it's been in a long time, which is why also markets are not moving. Markets were moving quite dramatically at the start of the year. They seem to have simmered down. They're not doing anything right now, which could be the calm before the storm. The issue is in what direction will the storm come. Now, storms are usually in the direction of lower asset prices. And I think that's a cloud that remains over the global markets for a long, they've been there a long time, it remains there. Dr. Rajan's also talking about the fact that the situation is not healthy. So, in fact, the thing that I was most confused by was gold. I thought actually gold would rise just because nobody knows what else to do. But that's gone up and come down again. It was also curious that global equities did not crash after the terrorist attacks yesterday. And I think that could be because, they realized that the ramp up in the fight against terrorism is going to involve more government spending. And maybe markets are really saying that's what we need. We don't need lower interest rates, we need more government spending. Of course, more government spending means more debt, means the instability increases. It's a difficult situation, The rupee has been, as I've mentioned to you in the past, moving sort of in a steady downward channel. It shot up, actually, almost reached the top of the channel and has come down a little again. I can't see the future. It looks very cloudy.
The gold chart I was looking at this morning before the market started trading, it bounced and tested the 76.4% retracement against the highs at about $1271 and has since turned back down.
What?
So on charts, it does make sense what's happening. But
what are you talking about? What?
Gold.
Oh, gold, you mean? Right. Yeah.
Right. So you're saying
that...
I
don't know. I feel ultimately if I were to take a bet right now, I'd buy gold.
Okay, you buy gold. Any thoughts on, you said this cloud over the global market? You meant the yuan, is it?
Sorry, I didn't get that. What did you say?
You said this dark cloud over the global market, global economy, is you meant the yuan, the Chinese yuan, right? Just wanted to get that right. I missed that. No. By that I mean the fact that there is no growth globally. The fact that, people like Trump are coming up. The fact that, nobody knows what's going on. I think fundamentally there's some big changes happening. I think globalization as a given is under question. And it's perhaps a good thing. I think you're going to see lots of fiscal action in the U.S., particularly after the election, which will actually push asset prices lower. With negative interest rates, how can equity, you have that, what is that called? That equity premium, which is 6 to 8%. If your risk-free interest rate is 0, means all you can look for is 6% on equities. So I'm saying that the game is changing. You see lots of high-end assets coming down. Art has been coming down. High-end real estate has been coming down. I don't think it's turned into a real drama yet, but it's on the fringes. So I think that people are really holding back. I don't think you're going to... If you see a big move, I think it will be in the direction of asset prices going down. But it may take 6 months, a year before that happens. You mentioned Trump, but I think
Which
you did, I think, about a year back.
I don't know.
Yeah, sorry. Yes, of course.
Are you saying if there is a big move, it most likely will be on the way down? No, I'm talking about Trump. I think you did predict the rise of the left. I think a year back then we spoke, especially in US politics. So we have Bernie Sanders there.
You saw Bernie Sanders. Yeah, see, the interesting thing is Trump and Sanders are saying some similar things. Trump is talking about companies should not be allowed to move overseas for tax purposes. Sanders has been saying, hey, baby, pay your taxes. Warren Buffett has been saying it for a long, long time. And, if if the fiscal policy was tight and straight, if there was no such concept as tax avoidance as opposed to tax evasion, I mean, the U.S. would be much, much, much richer. The deficit would be much lower. The economy would be much healthier. But, I mean, the whole game has been stacked, perhaps not intentionally, but once it works in your favor, you keep playing that game. And over the last 30, 40 years, I mean, you've seen growth come down, which to my mind is basically a result of the fact that all the income has gone over to one side. It's interesting that Mr. Jaitley in the budget also increased the tax on super dividends, by 10%, which is, I think, the right approach in the West. It's not necessarily a good thing here. We have got a lot of inequality also, but we do have some growth. So, everybody's moving up. But in the West, there is no growth. There's no growth because there's no demand. And that needs to be addressed. Cutting interest rates is doing nothing. And I'm really grateful to Mrs. Yellen for not turning negative. Because, once you get into that place, once you fall below the table, if you've been drinking a lot, you'll know, it's very hard to get up. So once negative rates go below zero, there's no telling what's going to happen.
Yeah. So just to back on the currency, what's happening with the yen and this, this big carry trade? It's done exactly the opposite of what the central bank wanted it to do rather. I mean, is that turning as well? I mean, or it keeps going, you think?
Frankly, like I said, every weekend I read the FT, nice paper and all, Weekend FT. And this Sunday when I was reading it, it was so clear from reading the market section that really people don't know what's going on. So I don't think there's a lot of liquidity in any trade right now. People are just jumping around. Volatility is showing signs of rising. It's really the only thing everybody seems to agree on is that if there is a big move, it will be a negative move. Now that's a danger point when everybody agrees on one thing, right? But it's really hard to tell specific assets, like the yen or even gold. Much as I think gold is interesting, but it's also not able to really move. Nothing's really able to move.
Okay, can you
after all the down moves at the start of the year, okay, things have come back and they're sort of steady, but I don't know where it's going to go from here.
Right. No, is it possible that now that it's pretty much not a given, nothing is a given, but expectation is that the Fed only moves later this year. We, for a while, get back to this lots of liquidity, no tightening in the near term, no assurance, it's not a given that Fed will hike at all. I mean, if the conditions are weak, they may not hike at all later this year as well. So is it possible the markets get a few months of clean run and continue to sprint higher?
That could happen, but to my mind, that would happen when there is people are not as nervous. To my mind, see, if for example it becomes clear that or less likely for the Fed to hike, it could be taken two ways, right? It could be taken that U.S. growth is bad, and my sense is I don't see sentiment. I don't see any positive sentiment anywhere, and to jump onto the risk-on bandwagon, right, which would happen if the Fed was not raising rates, you would need to, be ready to dance. And the music seems a little dim right now. And that's a problem. We can turn it up a little. So maybe it will. I don't know. Like I said, but even if it does go up, I'd see it as an opportunity to sell. I have become a bear.
When the music gets dim, as they say, you should drink up as to keep, that's the liquidity, right? Which
it may
doesn't
also be
seem
that
to
I'm getting
ending.
old and I can't hear very well. Maybe that's all it is, Maybe I'm getting old and getting conservative and I can't hear very well. Maybe that's all there is.
Right. Any thoughts on on the currency? Just one last question, Mr. Mecklai. On the currency here, the rupee, the RBI, the cut in the small savings rate, just put it all together. Any thoughts?
Well, the rupee has been moving in a very, very well-behaved fashion. Mr. Rajan, he's I won't say disciplinarian, but he likes things neat, I think, judging from his appearance for sure. So the rupee too has been moving very neatly between, I think about 1.5, 2 rupee spread, up and down, over time. But it is aiming downwards. But, about 3-4 months ago, when all the foreign banks were talking about 72, that's not happening tomorrow, I don't think. I think we'll see it moving around. But in fact, one of my technical guys told me 65.07. I immediately sent him to a doctor. I can't imagine how that could happen. But, so I think, 66.50 to 68 for the very short term, is where we are, and I think that's where we'll remain.
Fair enough. Mr. Mecklai, thank you for your time. It's always a pleasure. Happy Holi to you, sir, from all of us here. Enjoy your
Good luck.
Long extended weekend. Thank you, sir. Thanks very much.